Welcome to the Plant Grow REIT podcast.
Welcome back to the Plant Grow REIT podcast. Today we've got a very topical issue to tackle. It's one that's going to impact almost every Australian employer, and that is Payday Super. So we're going to break down what Payday Super is, why it's being introduced, and what businesses need to do now to prepare for when it comes into play later this year. So I'm joined by our manager and accountant, Trung, because he will be sharing all of his insight as someone who works day to day with business owners and employers, and he'll be able to tell us a little bit more about the compliance side of things and what business owners need to be doing. So welcome back to the podcast, Trung.
Hi, Chelsea. Yes, thanks for having me in today. You're right, it is a very topical issue at the moment because it's coming in the next 5 months. So all employers need to be really across the changes and what's required. But I thought I'd maybe start off with going back to, I guess, the superannuation system and you know, it's the envy of the world. And
is it actually?
Well, a lot of people have copied it and or have sort of mentioned that it's such a great system. It's been introduced, but obviously over time there are issues to fix. And I think what we've seen with STP reporting, the government knows there's a lot of unpaid super, so they've introduced STP reporting just to assist with, I guess, the tracking of the unpaid super. And I think
STP is in single touch payroll.
Sorry, yes, single touch payroll, where the data is being collected and the ATO more frequently and in a better way. So then the ATO, the Australian Tax Office, can track what's been unpaid. And I guess this Payday Super is the combination of all the years leading up to this, getting employers ready because they've been used to reporting the STP. So from 1st of July 2026, the requirement would be for employers to pay employee superannuation on payday.
Yep.
Then the requirement is to pay it within 7 business days.
Yep.
So I guess that's the clarification to note because effectively 7 business days probably ends up being 9 calendar days.
Yeah, so you do have a bit of wiggle room.
There is a bit of wiggle room, and there is some more wiggle room in terms of if a payment's been rejected or if there's a new employee that comes on board, but we'll get to that a bit later.
Yeah.
So that's sort of like the summary of it. And, you know, I guess the objective of the reform is just to strengthen the superannuation system, get reduce unpaid super and just get better reporting. And it helps benefits everyone because every employee will be benefiting from more regular payments. And what will happen is that when the payments come in more regularly, there's that kind of compound interest and what have you. So everyone will benefit from it.
So compared to the current system, I know that sometimes employees think that because when they get their pay slip fortnightly or weekly or whenever it is, they can see that the super is in their pay slip has been paid. But what they might not know is sometimes it hasn't. When the pay slip is issued, it's often paid quarterly by employers. That's
correct, yes. So with the pay slip, it just says this is the super, this is, I guess it's been reported as what will be paid. But then, if you're across it, you would double check that when that super is paid after the quarter end, if it is a quarter end one, that it matches back to what your pay slip says. But
it's sort of eliminating that need to have that big gap between when it's recorded and when it's actually paid.
That's right. I mean, you can always be diligent and check it yourself, but by having this more regular payments, it is easier to check. Yes.
Yeah.
Correct.
And will it apply? So you've mentioned 1 July 2026.
Yes.
Will it apply straight off the bat for all employers, or is there a bit of a staggered intro?
So it will. There is no staggered introduction. Yep. It will apply to all employers.
So everyone who employs anyone needs to be across this.
That's right. Anyone that employs anyone that pays salaries. It could be a contractor, it could be a director, will require to pay within 7 business days of their payday.
Yeah. I think maybe the director thing is a big thing as well. I think sometimes people who are just operating as a director of their own company think that sometimes they hear employee related changes and they think, oh, that doesn't apply to me. But in this case, it definitely does.
Yes, it does. And that's a good point that you brought up, in that directors may sometimes have self-managed super funds, and the 7 business days does apply to self-managed super funds as well.
Yeah,
I'm not sure
good
how
to
the
know.
ATO will track that, but it's the 7 business days applies to everyone.
Yeah. In terms of tracking, it might end up being part of the audit or something like that. Who knows? We
Who
can
knows?
only
Okay.
speculate. We can only speculate. Are there any big exceptions or anything like that to be aware of?
Exceptions in terms of
Not having to do the payday super? Or is it really an all-encompassing rule?
yeah, it's like I said before. Yeah, it's anyone that has a salary, that has paid salaried and is required to pay SG, it covers them.
Yep. Awesome. So in terms of payroll systems and super clearinghouses and things like that, you sort of touched on before, if a payment bounces back or something like that, is there any concern of that software is going to have to adapt to this new system, or can people be pretty confident that everything is set up already to manage how this will work?
At this point in time, I don't think everything is set up. I think
okay.
what's happening is the ATO, the software providers, even super funds are really working their hardest to get all the necessary things in place.
Yep.
I think it will be right up to the end. We'll see some changes, and that's one of the things that employers needs to, I guess, be across. A lot of software providers will probably publish updates or training right up to 30 June or just before that, and even after.
Yeah. So everyone's working towards that deadline, both employers and software providers alike.
Yes, I would imagine that's the case. Yes.
If anyone's concerned about what they need to set up as a business owner or employer, or if, someone is working, say, as like an in-house bookkeeper for a medium firm or something like that, and they don't have that big support system of like a whole internal accounting and bookkeeping system, where can they go to get support and advice and keep on top of all of the updates as they're coming through?
It's going to be one of those things where information is going to come from everywhere.
Yeah.
I would say the software providers, see if there's any released training or material, and likewise the ATO, because I know that ATO is planning to introduce or implement the improved super stream. So yes, stay across any notifications and that. One of the things I will say is that for employers, what they could do to get prepared is possibly adopt early the Payday Super.
Yeah.
So instead of waiting on the quarterly basis, perhaps try to implement that now.
Yeah, sort of iron out the kinks before it's...
That's right. So just a suggestion, perhaps maybe from April, May, those 2 months, if you start sort of adopting it early, paying it 7 days, or prepare the systems, the process and systems in place, have that. So then you are sort of adopting it. And so by the time it ticks over to 1st of July, then you're already doing it, and you kind of know if there is any systems breakdown that you've addressed it.
Yeah, it gives you a little bit of a practice run, so to speak.
Right. That's right.
Because obviously, as it's coming in and it's law, the penalties, presumably, if people do get it wrong, will be severe. I think there's always a little bit potentially of a grace period of people understanding that it's a new system. But generally speaking, what will happen if an employer doesn't pay that super within the 7 business days and there's not any issues with bounce back or anything like that?
Okay, so the biggest change is previously any late superannuation payments weren't tax deductible, whereas now they will be tax deductible.
Yep.
But the key thing is to minimise any admin charge, you need to self-report. So as soon as you figured out or realise that there's been a late payment, you need to self-report that to the ATO and pay the outstanding super, or the late super to the super fund, just to minimise any additional sort of interest that the ATO will calculate. And so what will happen, and I don't know how the form or the reporting will work, but because the ATO hasn't released it yet, but they will calculate the interest and apply an admin charge on that.
Okay, yeah.
So, and those, the superannuation guarantee, the admin charge and the nominal interest, that will be tax deductible. That's the new thing, whereas previously it weren't.
Okay. And is that per employee that is not paid on time?
That's correct, yes.
So that could add up quite quickly if you've got a big
so that's
team.
the other change. So previously it used to be $20 per employee per quarter, what have you, but now if you don't self-report, the penalties could be up to 60% of the SG that's outstanding.
So it's pretty significant.
Yes,
And
it can be significant, yes.
Yeah.
Yes,
And they're
if you add
wanting
them up.
people to be proactive. Like if you've noticed that you've missed something, don't just ignore it or bury your head in the sand or think that no one will notice. It's better to come forward.
That's right. So I think the first thing you do is self-report to the ATO, because then the admin charge that I was discussing, up to 60% of the SG, can be remitted if you self-report and let the ATO, hey, I missed this. These are the numbers. Most likely the ATO will then calculate the nominal interest and the employer will pay that part. The late super, the employer should have already paid the super fund, and that will all get calculated by the ATO.
Yeah.
Okay, so I briefly touched on the fact that the SG superannuation guarantee charge, if there's a late payment, and the administration fee and an interest charge on it is tax deductible. There is a second component to the charge in that if the employers don't make the payment within 28 days of being assessed by the ATO, the ATO will start calculating additional interest as well as some further admin fees on top of the initial one, which will not be tax deductible. So that's important to sort of understand. So again, like we discussed, it's about being proactive. If you've reported and they've issued you the notice, make the payment, and then that will clear things out. Otherwise, if you don't make it on time, then it's past 28 days, then those additional charges and interest will occur, and they won't be tax deductible.
Yeah. So it's not enough to just self-report. You got to self-report and immediately do the payment sooner rather than later, so that it gets within that 28 days. Otherwise, it won't end particularly well.
No.
Is that something that they can reach out to their accountant or management accountant for support with? Like if they notice that they've missed something, do they call the ATO up themselves, or is it better to go through somewhat like a tax advisor or a tax agent?
I would say we'll have to wait till the ATO releases what kind of because previously we've had the super guarantee form, and that's no longer relevant. So there'll be something to replace that.
Yes. So there are a few changes in the works in terms of
that
how
hasn't been
everything
released.
works.
Yes.
Yeah.
And that's what I mean. Previously, I said everyone is just working away at trying to get it all ready.
Yeah.
Sure, it'll be up to 30 June. There'll be some changes or releases.
And we'll definitely be adding in as many resources as we can in the episode notes of this episode as well. So if anything does get released between time of recording and time of release, we'll make sure to include them all as well. So what are the biggest concerns or challenges that you think that business owners are having in the lead up to this? Is there a concern for cash flow or making sure that you've got enough liquidity to be able to pay that super each fortnight or week or month?
That's right. The biggest change will be managing of cash flow. So previously, as I said, on a quarterly basis, you've got that extra couple of weeks to pay the super, whereas Now, depending if you're a weekly or a fortnightly or monthly, you'll have to pay it within the 7 business days of when you make the payment of the salary, so or the wages. So yeah, that's the biggest thing, the cash flow. But in the long run, I think what everyone would hope is once the process normalizes and everyone gets their cash flow the right way, it will just be part of it'll be normalized.
Yeah. It'll just be like a normal part of doing business.
Yeah. But I think that initial first month or so will be the biggest effect, yes, on the cash flow.
And that's where your suggestion to start that earlier means that that tricky bit is before it's legally binding.
That's right, yes.
No, I think that's really great advice. I know that whenever anything new comes out in terms of legislation, tax, super, all of those things, it gets sometimes blown out of proportion across all the different industry publications and in the media. Have you seen any myths around Payday Super or things that are getting a bit misconstrued that you think is worth ironing out for people?
I haven't seen anything, but the one thing I will say is, and just to educate, I guess, employers is there is a new allocation of liability of when the super is paid, how the super funds allocate those payments. Mm-hmm. So what will happen in that first month is there's a outstanding liability, just say from 30 June, and you make a payment, it will actually go against that liability, the first liability. So what I'll probably sort of associate it is with the accounting term FIFO, first in, first out. So this is like if you've got a first in liability, which is the 30 June superannuation liability, and you make a payment, say, on the 10th of July, would actually go against that 30 June liability balance.
Instead of...
if you're a weekly payer that first week. So that's something to note. It's just the way I guess the way it's been allocated is changed.
Okay, yeah, that's a really good point because people might make that first payment on the 10th of July and think they're covered, not realising that it's been allocated elsewhere. That's
right. So if you're a weekly or fortnightly, you need to address the 30 June balance first just to get a clean slate. So that's another suggestion. We normally discuss with clients during tax planning to pay the liability up to 30 June anyway. So that's our sort of a good tax planning tool for us. But I guess for this year, it's probably more important in terms of transitioning to the new Payday Super regime, because if you're paying all your super up to 30 June, then you start off with a clean slate. So if you're a fortnightly or weekly payer, then you start a clean slate, and then any payment of super will be on the most recent liability.
Yeah, that's very good advice.
Whereas if you're a monthly, then it's probably just by the time you make your monthly wages payment, you probably made your super from the quarter before anyway.
Yeah. Are you seeing any discussions around whether there's any benefit to changing the frequency of payroll or pay periods, or is that overcomplicating it? If business owners are a bit worried about cash flow, would you recommend that they just stay the course and keep things as they are, or is it worth them messing around a little bit and seeing whether they can give themselves some more time in between?
Look, the cash flow, the timing of it probably helps by a week or two, but I think the benefit of changing, if you can, and that's if you can, because you would have to check the industry awards and employment contracts or what have you. But if you can change to, say, a monthly, then yes, I think the administration side of things for the payroll, the person who's doing the payroll will definitely definitely sort of benefit them. Yeah.
General advice only, yes, obviously. But yeah, I was curious whether it had come up in conversations. So you've already touched on the fact that the ATO will be actively monitoring this. I feel like there's a lot of discourse online about business owners feeling like the ATO is watching them and everything they do now. I think, though, it is fair enough to be said, like you mentioned single touch payroll before, the ATO and all of their data sharing has been an ongoing process for several years. So really it's just building on the visibility that they already have around payment and when things are going through and how much money is coming in and out. Do you think that this is sort of just simplifying it, or do you think that it's just adding another level of compliance that business owners need to follow?
That's, I guess, the controversial question, perhaps. It would definitely add an extra layers of complexity.
Yep.
Yes, but as I sort of mentioned earlier, the benefit is there.
Yeah.
And the reason why it's introduced is to just improve our superannuation system and improve the tracking. And if there's any late payments, either the ATO and employees can actually see it and jump on it sooner rather than later. Yeah. So that's where the benefit is.
Yeah, and I think it is important to highlight the benefit. Like everyone does benefit from having super that is compounding sooner than waiting to the end of the quarter or whatever the case may be.
Yep.
That's something that definitely improves long-term benefits for all across the board, everyone who's getting super, which is basically everyone. I think it's $450 a month and above.
I think I saw a number that the ATO sort of mentioned. It was 8.9 million people will benefit from the regular payments.
Yeah.
But if you look at the number of people employed at December 2025, it's 14 million people. So that's how many people will sort of benefit. Well, actually, I think the 8.9 is probably the people who have not been receiving regular. It's probably where the
it's probably most going to benefit those people who. Right. Well, I know that it will remain nameless, but a previous part-time job that I held before Aintree Group, I know that super was something that lagged significantly. I would note even more than quarterly. Yes. So I think that there are definitely industries or businesses or areas where this will definitely make a huge difference to employees.
So this is where, as an employee, you can just perhaps download the app to your super fund and you can track it a lot more, or just have access to it and see. It will definitely be more transparent.
Yeah. So overall, it's a positive thing. I think we've definitely highlighted that. And like you alluded to before, give it a couple of months and it will just blend into the general way, like just how you do business. It just becomes the norm. It's like anything else.
Normalize the payments, the regularity of it. One thing I should mention is that one of the key risk areas for employers is that when there's a new employee coming into the business and you have to onboard them.
Yep.
So what I mentioned, there was 7 business days. When there's a new employee, you have actually 20 business days.
Okay, yeah.
So to get their make the payment into their fund. So one of, the key risk areas is when you don't have the details. So as soon as you get an employee, make sure you get those details. And also check with the ATO or any other, or MyGov if they can, if those details are correct, because it's better to get the details correct the first time rather than make the payment and then have that payment rejected and then you have 20 days to sort it out. So
it sort of becomes more of a deadline.
Yes.
Yeah, so reviewing those onboarding procedures and forms and everything like that's really important.
Yeah, like you said before, being proactive on superannuation is going to be the key thing to do in the future on all matters. Collecting data, making sure that's right, and then making the payments, and then checking if the payments or if there's any missed payments. Because as soon as you're late, the days count in terms of interest accrued on the late payment.
Yeah. So proactive action is definitely the way that we encourage everyone to approach this. Yes. For business owners and employers who want to take that step in being proactive, what would be the first place that you would tell them to go to start that process?
I kind of alluded to before in that try to adopt the 1-day Payday Super as soon as possible.
Yep. So do they just go into their payment system and they just change the frequency that's going through? How would they process that?
Yes. So every time that they want to make the super payment, just say if it's a fortnightly, instead of previously they were doing on a quarterly basis, perhaps try to process it. Cash flow, bear in mind, cash flow, just making that payment as the fortnightly pays or weekly pays are done.
Yeah, I think that's a really important and really actionable thing to do.
And that's why I said maybe leave it towards April, May. So
let the cash flow recover a bit from the January, February slump. Is there anything else that you really wanted to highlight on this topic?
I guess the framework of people, process, and technology still stands. So for employers, they should look at people doing the payroll or covering or this area to ensure that they have the right training. I guess the process I talked about before, ensuring you've got some systems and process in place where if something goes wrong, you can, I guess there's safety nets to sort of correct that.
Yep.
And by implementing it early, you can pick it up and see whether systems or process are failing before 1st of July. And then finally, I guess with technology or the software, get across the training and keep up to date with what's been released because I'm sure all the software providers will improve their reporting as well to assist employers. So it's one of those areas where I think over time we'll probably get better because everyone will be improving all their processes and what they provide to employers.
Yeah, that makes a lot of sense. Before we finish up, do you want to quickly touch on the news about the Small Business Superannuation Clearinghouse and what's going on there?
Yes, so part of the new changes will be that the Small Business Superannuation Clearinghouse will close from 30 June 2026. But what that will mean is the final quarter, which will be 31st of March 2026, that will be the final quarter where employers can make payments using the Superannuation Business Clearinghouse. Small Business Superannuation Clearinghouse. So after that, employers who are currently using that exchange will need to find another one.
Yeah, okay. So that's something that they should really be looking into now for alternative options.
That's right, yes. So it will be either the other super funds or software providers.
Yep. Thank you very much, Trung, for sharing insight on this. I know it can be hard to sort of condense down really lengthy, complex super and tax law into something that the rest of us can understand, but I really appreciate it. I think the key takeaways for me and for any employers out there is definitely that being proactive.
Yes.
Be proactive, try it out earlier, like start testing it from April, May, June, whenever you can, so that you've sort of had those practice runs before the penalties come into play. And then from 1 July, if you do miss something, take action immediately.
Yes.
Self-report and make the payment to avoid those penalties getting bigger.
Yep.
Thanks very much.
Thanks for having me.
Thank you for listening to this episode of Plant Grow Reap. If you have any further questions about Payday Super or any of your obligations as an employer, feel free to get in touch with us at Aintree Group. We will have all of the details down in the show notes. Enjoy the rest of your week, and we will be back with another episode in a fortnight.